Trading Nut, episode 97.
We always have this ratio that we always tell our students that Forex should be 80% psychology, 15% technical and fundamental analysis, and 5% luck, because there are factors in the Forex market that you can't control. And also, just going by that ratio, you can already see that psychology is the most important, and to me, personally, the main key that would determine you being the difference between a successful and a consistent Forex trader as compared to a break-even or a drawdown trader.
The market's going to do something. Your job is not to fight it.
The market never, ever runs away. It's always there.
That personal diary of trading will make you a much better trader than...
I could be right about the direction, but wrong about the trade.
Don't focus on the monetary side.
Trying to make too much money on a trade is what I have seen killed every trader.
Your losses offer you some of the greatest insight you can find into your mistakes.
Relax, learn the process.
Candlestick pattern trading is a freaking trap.
Don't be in a rush to become a millionaire.
Let the market tell you what the market wants to tell you.
This podcast is not financial, trading, or investing advice of any kind. Before we start, I'd like to thank our sponsored partner for today's episode, City Traders Imperium. Now, CTI has one of the world's best funded accounts and learning platforms all in one. Get a CTI Forex funded account today and advance a step closer to achieving your personal freedom. To find out more, head over to citytradersimperium.com. That's citytradersimperium.com. What's up, traders? Welcome to another installment of the Trading Nut podcast. I'm your host, Cam Hawkins, and today we've got a two for the price of one special. We've got Kamil and Jerome, two traders there from Radical Forex in Singapore. I've got them both on the show here answering my questions and also jumping on a price chart afterwards and sharing with us a unique approach, which I know you will love and I know you will learn a lot from, because Jerome goes into a lot of detail on this one. Okay, so guys, that's coming up. That's all over there on tradingnut.com. You'll be able to see that video there or on the YouTube channel. Now, talking about the YouTube channel, before we get into the show, we're having so many live streams at the moment. I've got scalping competition, scalper versus scalper, trading competition, trader versus trader, which is currently not running, but we've got trading view replay challenge. So there's at least 2 live streams happening a week here on Trading Nut. At most, we might get 3. If you do want to take part in the scalping or the trading view replay challenge, then please hit me up on Instagram and I'll see if I can get you on there. Now, another thing that YouTube's renowned for is its merch. And I haven't had merch here on Trading Nut for years, and I've wanted to, and I could never work out what it was I was going to create. So I've finally had a stroke of genius, and I've come up with something which is very quirky, very different, not something you'll see in the trading space ever, anywhere, probably in the future, or would have seen in the past. It's merchandise that you can get. I haven't finished it yet. It's still in development. I did give a sneak peek on one of the live streams. If you do want to scroll through the hours of footage over there, you'll find it near the end. I whipped up, only for a second, a quick look at the at what this merch might look like. In fact, it's sort of evolved from there. But I've got an artist doing it. I think it's going to look pretty cool. Very quirky, trader specific. Hope you guys are going to love it. Anyway, enough from me on that. Now, the other thing I do want to talk about is a book that I'm reading, or not reading, I'm listening to it at the moment. It's Napoleon Hill's second book, the one that wasn't released originally. It's called Outwitting the Devil. Okay, so this is what I had no idea what it's about. I heard a podcast years ago which would constantly mention it, saying you got to listen to this book. I had never done it, and I finally decided to do it. I think it was last week, and I've got to say it's a really good book, especially for really honing your mental. Your mentality. Yeah, it's good for your mental health. It's good for your mental health. It's good for either reinforcing your mental health or trying to fix your mental health if you're struggling with it. So, guys, worthwhile checking out. I didn't realize it was about that, but it's a fantastic book. Really fascinating. Do recommend it. Now, before we jump into this, the other thing that's going on here is I've got these trading robots that I'm running. Just noticed that the one that I'm giving away for free, and I'll put this up on Instagram, the one I'm giving away for free has already made 86% on a very small live account this year. But it's fantastic to see. It's managed to make 86%. Will that continue? Will it still be 86%? I don't know. But anyway, long story short, I'm giving that away as part of my Robot Builders Club free training. So if you do want to check that out, head over there. And if you do want to build your own trading robots, learn how to do it really quickly, probably the quickest and best method for building trading robots that I've ever come across is something I teach. It's at my Robot Builders Club. So guys, go and check that out as well. Now, let's get on with it. Let's do the show. Here we go. Jerome and Kamil. All right, folks, here we are. We've got Radical Forex here on the show. We've got Kamil and we've got Jerome, who have been recommended to me by one of my listeners. They said, look, some of the stuff that these guys are doing is fantastic. So, guys, welcome all the way from Singapore to the show. How are things with you both?
Hey, everything's going well. Everything's going well. Yeah, everything's going well with trading. Everything goes well with the mentorship and everything. So yeah, great to be here.
Cool, brilliant. Well, look, so we've got two of you here. So we've got Kamil and we've got Jerome. So Kamil, do you want to start off by just sort of like introducing yourself quickly? How long have you been doing Forex, and then we'll go on to Jerome.
Okay, so I've been doing Forex for about 5 years. I started when I was 19. Prior to that, I was trading stocks for the past 1 year. So I was dabbling into stocks, but then ultimately I moved into Forex as I believed that there was more volatility and there's more liquidity in the FX market. So I jumped on that opportunity and never looked back since.
And Jerome?
For me, I started trading Forex about, I would say 1 year ago. But prior to Forex, I had experience trading the crypto market. And a cool thing to know is that actually coming over here is actually my first mentor in Forex, because basically he was recommended by a mutual friend. And I was looking to change into the Forex industry. And then after that, got him to mentor me, and then after that, then the rest is history.
Brilliant. So I think what we'll do today is we'll get into the. We've got literally the whole raft here. So we've got stocks to Forex, crypto to Forex, crypto now. So I think this is going to be really interesting for the guys listening to get a feel for like the whole spectrum of instruments that you can trade. So to start off with, let's go with you, Kamil. Let's hear your story from really at the very beginning. What got you into it? And I'm going to dive in and ask you a few questions around this to really help people understand, what made you different, why it is you're able to succeed in the Forex markets.
Mm-hmm. So basically, the reason why I started is it's a bit stupid because I was watching The Wolf of Wall Street. Then I saw how much money they could make from trading stocks. So that was what got me dabbling into the market. So because I personally like cars. So basically, cars in Singapore are really, really expensive. So if you want to get a car, you need like substantial amount of money. So that was what got me into stock trading at first. So after I watched The Wolf of Wall Street, then I started reading up on stocks, but it was more on value investing. So because of that, there wasn't much money to be made in the short term. So after about a year, I think I was getting pretty decent returns on my stocks. So a year in, I think I was up about 20%. I think that wasn't too bad in hindsight. But when I first moved into Forex, the returns were quite literally quite crazy because I didn't really know how to risk manage properly. So basically, all the trades I went into when I first started trading Forex was all full margin trades. So so I basically flipped my $2,000 account into $20,000 in like two weeks, I think. Yeah.
And so and by doing that full margin, I mean, like, you literally lose one trade and you're done, right?
Yeah. So literally my first trade was 100% because I started with a $2,000 account. Then I went short on gold, I think. I went 2 lots short on gold. Then I made about 1,008 USD. Yeah.
So almost 1-to-1.
Yeah, almost 1-to-1.
Almost 1-to-1. Okay.
Yeah, so that because of that, then like there was this bad cycle. So I didn't know how lot sizing worked. So what I did was my first trade was 2 lots. Then because previously there was this guy that sort of like told me about FX, right? So he was telling me, your lot sizing is proportional to your account size. So like he said, like if your account is at 2,000, you use 2 lots. If your account is at 3,000, you use 3 lots. So right. That's what I did.
Right. Okay. Yeah, and he didn't sort of tell you where to put the stop loss as well. So.
He didn't. So I didn't trade without. I didn't trade with any stop loss or anything.
Oh right. So you were really sort of treating it like an investment. Like I'm investing in this Forex pair, and I won't put a stop loss in because I'm not intending to get out until I make some money. Okay, interesting. And so okay, you talked about a guy you were learning from. Obviously, didn't sound like the best mentor at the time, but I mean, how else did you learn from? That's right. How else did you learn what you know now, and how did that sort of journey go from there?
So basically, I learned like most after the bad experience. I think I learned most of the things from baby pips and like books. So like the Candlestick Trading Bible and whatnot. So basically, it's more of just experimenting with what works for me. And at that time, there was this very, very famous gold trader on Instagram. She's called Dira the Gold Digger. I'm not sure if you've heard of her before.
Yeah, I've heard of her. Yeah.
Yeah. So I was a huge fan of hers. Yeah. So basically, what I did was I was just trying to copy like whatever she did. So she only traded like gold. She mostly traded gold and GBP JPY at that time. Yeah. So I mostly traded gold for my first 2-3 years.
Okay.
Yep. Then,
okay. Right. So you weren't really doing Forex. You were doing mainly gold and how did you do over that sort of, after that initial 20K, how did you go from there? I mean, did you just blow it all eventually, or what happened?
Yeah, so after the first 20K, I took quite a big loss. I think I took a $4,000 loss or something. Then I just stabilized all my lot sizing at 1 lots to 2 lots. Then the next month I made, I think, 4,000. Then the month after I lost 16,000. Yeah. Then that was when I started like really looking at risk management and whatnot.
Okay, so how did you sort of stumble on the final strategy that you trade now?
I think because after any post that she made on Instagram, I would basically I'll screenshot all her posts, and I was trying to figure out like how she traded. But I mean, I don't really know how she trades, but what I do know is that she does use the higher time frames and go into the lower time frames, the top-down analysis. So that's mainly the gist of what I do. So I identify the trends on the higher time frames. I identify key levels on the higher time frames before moving down to the lower time frames and just reacting to those higher time frame levels. Yeah, so I would say it's a pretty simple strategy.
Cool. And okay, let's jump into Jerome. So Jerome, how did you? Let's start off with how did you get into like trading in general? So cryptos.
So actually, I was in secondary school, so I was relatively young at the time. I would say this was about 4 years back. Yeah, 4 years back. So actually, my first brush with crypto was kind of random. So back then, I think Bitcoin was still either relatively unknown or was just getting on its hype. And so my friend just asked me if I wanted to purchase some Bitcoins, and I purchased them. I remember I purchased my first batch of Bitcoins when it was around $300, $350. Wow. So then I kind of forgot about it, and then after that, eventually I went for a crypto course. So that was 2.5 years later, and then after that, I remember that I had some Bitcoins, and I think just nice it coincided with the 2017 Bitcoin bull run. So I dumped my Bitcoins back then when it was about like 9.610K, if I'm not wrong, at the end of 2017. And then after that, that was basically my first pot of gold. And then how I got into trading was because I knew that basically after my education, highest education in Singapore, I wouldn't be going to university. So I was kind of looking for something to do. And then because I've read about the financial markets and stuff like that. So I was deciding between the stock market and the Forex market. But eventually I chose the Forex market because it was more liquid, and also because I had more friends, considerable amount of friends around me doing it as compared to the stock market. So I figured that if I chose the Forex market, at least I could look to these people for guidance or mentorship. And then so I started trading the Forex market, and I mentioned earlier, Kamil was actually my first mentor. And he taught me the fundamentals. He taught me basically swing trading in general, intraday trading. And then when I went to practice it on my own and stuff like that, I realized that it didn't really suit my personality, in the sense that I would say that I prefer to hold trades for a lesser period of time. So I prefer to be in and out of trades because for swing trading, you generally be in trades for about, back then I would say about like 3 to 5, or even over the weekend is also possible. But I generally don't like to hold my trades that long. I don't like to go to sleep with my trades still active, with my trades still running. So I looked for, I would say, a more aggressive and short-term holding of trades, and therefore I turned to scalping. So I would say that my trading style is generally more based around scalping into intraday trading. Usually my entries would be for scalps, and then after that my runners would run into intraday trades. So for scalping wise, I look around for mentors, but in Singapore, scalping is not really very established. We don't really have many famous scalpers per se. Therefore, I started looking over Instagram, and then I came across like one of the guests, Wicks Don't Lie, and he has his New York live streams and every about 6:30 p.m. in Singapore time. So I started looking into his live streams, attending his live streams and stuff like that, and started like just picking up any bits of nuggets or knowledge that I could get over there and incorporate into my own trading style with a lot of back testing. And then basically here we are.
Right, cool. So you guys trade completely different styles, Jerome, is that right?
I still do swing trading. I would say I'm a hybrid, but my main focus would basically be on scalping. So under Radical, basically, Kamil focuses on the higher long-term like scalping intraday parts of trading, while I just basically focus on the more aggressive scalping. Yeah.
Okay, and do you want to quickly give the listeners out there a bit of an insight into how you find the difference between trading the crypto market and trading the Forex market?
Trading the crypto and trading the Forex market. I would say fundamentals. Fundamentals is one of the biggest difference. So fundamentals is just generally one of the biggest difference, because in your FX market, you have your major currencies and stuff like that, and each of them are impacted by each country's or the economic climate news and stuff like that. But with the crypto arena, we don't really have that much of a big impact in terms of news as compared to obviously the financial news. Because just with Forex per se, just with the US dollar, news aside, you have President Donald Trump just tweeting something, and then after that, USD could spike up or down. But we don't really necessarily have that in crypto. So I guess that's one of the main differences. And also, the main difference or the main reason why I shift into Forex was because Forex was more of it had a longer term history. And also for me, basically crypto wise, I just wanted to take on an approach of just buy and hold approach, and not so much of actively trading it. But I could do that more in Forex. Yeah.
Cool. And okay, right. So Kamil, do you want to give the guys a little bit of an insight into some, I suppose, the style of your trading, what time frames you focus on, winning percentage, risk to reward, that sort of thing?
Okay, so the style that I mostly do intraday to mid-term swings. I don't really hold my trades for long term. So the time frames that I usually look at would be the monthly, weekly, daily, 4 hour and 1 hour. So basically what the monthly, weekly and daily is to determine the direction. Then 4 hour and 1 hour is for trade control. So by trade control, what I mean is the trade management. So when I move my stop loss or where I look for entries.
And what's your winning percentage?
Win percentage is about 60%. And my risk to reward is minimum 1 to 1.5.
Okay. And how many trades do you reckon you get out a week?
So every week I take about maybe 3 to 5 trades maximum. Yep. But usually so basically when I look for entries, if I can, I would try to hold them as much as possible. So I will have multiple TPs, like up to maybe TP4. And I'll leave TP4 to leave the rest of the position to run. Yep.
And how many instruments are you monitoring when you're looking for these trades?
Generally about 3 to 5. Yeah. So basically, because we do the radical live streams and all that, yeah, so we do live chart analysis. So basically, when we go through trades with the students, we actively will look out for trades for ourselves. But I mostly focus on gold. So previously, I mostly focused on gold. But this year, I took the short for oil down all the way. Yeah, okay. So that was a pretty substantial short. And prior to that, I was just mainly trading gold and GBP JPY.
Okay, and what about you, Jerome? What time frames are you analyzing?
For me, I also use top-down analysis. So I'll look at the monthly, the weekly, the daily, down to the 4-hourly. But the main difference between me and Kamil is that my execution time frames would be on the 30 minutes or 15 minutes. So that will be basically on the 30 minutes and the 15 minutes is where I would look for my trades. And also basically how I manage my trades will all be based off that time frame as well, the lower time frames. Yeah.
And what winning percentage do you normally get?
I would say about, on average, 50 to about 65% per month. Yeah.
And what's your risk to reward ratio on those trades on average?
Risk to reward for my scalps would generally be about 1 to 1 or 1 to 1.5. That's for my scalping trades. Swing trades, then I would just generally look for higher risk to reward, like 1 to 2.5 and stuff like that. Okay,
cool. And how many pairs are you monitoring?
For me, I mainly specialize in all the pound pairs. Mainly GBP JPY, GBP USD, and GBP CAD. Those are for the Forex pairs. I look at indices like the Dow. And I used to trade gold, but I don't trade gold anymore. Yeah, but mainly I would say now the financial instruments that I look in is just GBP JPY, GBP USD, and GBP CAD.
And how many trades are you getting out a week?
A week, I would say anywhere from about like 10 to 20, maybe in between. Yeah, in between would be a good number.
Okay, yeah. Cool. And we'll stay with you, Jerome. What does your typical trading day look like then?
Okay, so I used to trade the Asian session. So basically, for Singapore time, for your listeners who are not familiar, the Asian market is Singapore time, basically about anywhere from about 6 a.m. all the way through to about 11 a.m. And then the London session will start. London will start about 1 all the way till about 5, 6 o'clock. And then that's when New York will kick in from 6 p.m. all the way through to about like 11 p.m., 12 midnight. So personally for me, I used to trade the Asian session, but I don't do that anymore because like what Kamil said, we have our live streams with our students and that can get pretty late into the night. So can't possibly wake up for Asian session. So right now, how my trading routine looks like would be I will wake up about like 11 a.m., about 12 noon. I will get a cup of coffee and get some exercise in. And then after that, I'll go on and look at the markets, how it trended overnight. I'll look at any important news. And basically from there, I'll do my pre-market analysis. And then after that, I would start trading pre-London at about 1 p.m. I'll trade it through all the way to New York. at about 11 p.m., 12 midnight. Then that's basically how my whole trading day goes and ends.
Cool. And what about you, Kamil?
So for myself, I mostly do my analysis on the weekends. Because you see, for top-down analysis, basically all your levels and all that are already in your charts, like because you've been doing it for so long. So basically, I'll just monitor like which levels are broken, which levels are respected. Then I'll just plot out which pairs I'll be looking at for the next week, and I'll plot out the alerts and levels that I might be interested in, and I'll check the news events for the next week to see what's happening next week for whichever pairs that I want to trade. And if the news, basically if the forecasted news is good for my trade, then I would most probably take the trade. Or if it's not that good, then I usually will stay out. But mostly it's all done on the weekends. So basically what I do on weekdays is just waiting for my entries and whatsoever. Also because I'm actually in university right now, so I have to spend time in university and also balance my trading. So I wouldn't really spend too much time on the charts on the weekdays.
Okay. And can I ask what you're studying on at university?
Yeah, I'm studying real estate at NUS, National University of Singapore.
Okay, cool. Right, now, what about, we'll stay with you, Kamil. What do you think made you different from like the other traders out there that are struggling with this, can't make it happen? Do you think you had any special traits, or do you think you did something different from what a lot of other people were doing?
Okay, honestly, I don't think there's anything special that makes me stand out or anything, because but I think the first portion of it was a lot due to luck. So I mean, we can't discount the fact of that luck is prevalent in trading. So I think if I didn't have that first stroke of luck in my first trading encounter in Forex, then I wouldn't be where I am today, because if I had just like blown multiple accounts at the start, I don't think that I would have basically this optimism in trading or to do better in trading. So, but I think one good thing to note is that I think my psychology level has been getting better over time. So I feel that psychology is one of the most important aspects of trading, because if you can't manage your greed, if you can't manage your fear, then that ultimately will lead to your downfall in trading. So that's one thing that we focus a lot in our mentorships and whatnot. Also, I think as myself in general, I'm not really a risk-averse person. So generally, I'm not afraid to take risks with my trade and whatnot. Although generally we stick within 1 to 3% for every trade in terms of our risk management. Sometimes when there are opportunities, like for example the oil shorts in May this year, so when there was that opportunity, basically I risked about 30% of my account to take that trade, which is why I made quite a bit from that trade itself. Yeah. So,
and on that particular trade, how did you determine that this is one I'm going to risk the house on, or 30% of the house?
Oh, because it was mainly fundamentally driven. Also, because of the whole coronavirus situation and everything. Yeah. So I didn't think there would be much like air travel or basically much movement in the market, much movement in terms of traveling, or basically even with all the lockdowns imposed and all that. So I had a hunch that that oil was going to drop, and thankfully enough, it did drop.
And where did you decide to get out, can I ask?
Yeah, okay. So I entered the position at about, I think, $36, and I exited at 16. So it's 200 pips, 2,000 pips, sorry.
Wow, great. Now, what about you, Jerome? Do you think there's something that made you different from other people out there, or the actions that you took that other people may not be taking?
For me, okay, so just talking about, like I mentioned just now, earlier in our Singaporean Forex community, there aren't a lot of scalpers per se. So I think one of the main difference that makes me stand out in the Singaporean community or the other community that we have over here is that I dabble into scalping, which, like I say, is a more aggressive and a more short-term holding of your positions. And also one more thing that we always mention, reiterate in our mentorships is on the psychology aspect of Forex. And we always have this ratio that we always tell our students that to us and also to your, it should be Forex should be 80% psychology, 15% technical and fundamental analysis, and 5% luck because there are factors in the Forex market that you can't control. And also, just going by that ratio, you can already see that psychology is the most important, and to me personally, the main key that will determine you being the difference between a successful and a consistent Forex trader as compared to a break-even or a drawdown trader. And to me, technical and fundamental analysis, anything that is done on the charts or where you look to for information on the news, those over time with practice, you will be able to get it. It's just a difference of, it's just a matter of how long comparing one trader to another. But I guess the main difference between a successful and a non-successful trader is really the psychology part, because there are some traders who can trade their whole career, their whole life, and they are still not able to get their psychology right. So I think one thing that differentiated me was that at the start, one problem that I had was obviously the toxic state of over trading and revenge trading, and that was mainly out because of FOMO and fear and stuff like that. And so I would say that over time, I really managed to. And also one more thing to mention is that because I trade on the lower time frames, and I trade on quite volatile pairs, like for example GJ, GP, JPY per se. And so FOMO is really very present. And also because on the 30 minutes and 15 minute chart, candlesticks sprint faster and stuff like that. The movement is more erratic, and therefore FOMO is even more relevant or even more present there. So I would say that over time I really managed to curb that. And I really managed to learn, or really managed to have the discipline as to when to enter my trades or when to exit my trades. Because in scalping, it's very common for us to exit our trades early because we read the price action of the candlesticks on the lower time frame, and that gives us the information as to whether we should invalidate this trade even before it hits our stop loss or close partials and stuff like that. Yeah.
Interesting, Ed. I like that. It's very good analogy, I suppose, especially around the scalping. And if anyone out there is a scalper, then it's words of wisdom there. Please listen to that again. Now, staying with you, Jerome, if there was 3 things on a price chart you recommend any retail trader spend the next month mastering, what would they be?
I would say the first thing is that always focus, whether you're scalping or whatever style of trading you may have. Always first focus on the higher time frames. So do your top-down analysis. Always focus on your higher time frames down to your lower time frames first. Because just generally speaking, from a scalper's perspective, because although we take our trades on the lower time frames, but however the higher time frame bias will always be more relevant, and the higher time frame bias is always more accurate than the lower time frame bias. So I would say that one thing that I see a lot of common mistakes of scalpers making is that because they get so trapped in the lower time frames, they often fail to scale and look at the bigger picture, and they may be caught in certain key levels which may reverse their trades. That's the first thing I would say. Second point, I would say for traders who look at a price chart and again talking from a scalper's perspective per se, is always try and use or always remember to use volume to your advantage. Because volume in scalping is very important. For swing trading or intraday trading, no matter when you enter your trade, you often experience a volume surge. However, in scalping, because we only hold our trades for about like 2 to 3 hours, 4 hours max a day, we want to make use of the volume. So always take note of when, according to your country's time zone, when there is certain spikes in volume. So, for example, your pre-London, your Asian close, your New York Stock Exchange, stuff like that. Always take note of these volumes. And another thing, the third thing I would say, which kind of forgot to mention just now, is that I think one thing that really helped me to step up my trading is basically trade journaling. And I think anybody who has dabbled in the Forex market, whether they've learned it on themselves or through mentors or whatever, they've definitely come across this term of trade journaling. And I'm sure everybody knows what trade journaling is. Record down your trades, reflect from it, see what mistakes there is, see any trends in your mistakes, and therefore from there you can come up with solutions. And I think everybody understands this concept, but I think trade journaling is one aspect of trading that has been really, really, really neglected. And I think that a lot of people do not practice that, or maybe they do practice that at the start, but then after that, eventually, maybe 1 or 2 months into their trading, journey, they get very lazy. But I would say that trade journaling is something that really, really helped me. So it doesn't matter what kind of trade journal you do, whether you do it on a physical book, whether you do it on a Word document, whatsoever, but always trade journal. Because to me, personally, I don't, how do I say this? Like, I don't think I don't learn much from my winning trades. I learn way, way more from my losing trades. Because in life, it's the same thing. I would say that it's not your success that defines you. It's more of like what's your mistakes and how you overcome that defines you. And to me, in Forex, the interesting thing about Forex is that I think that Forex is a representation of a person's personality on the whole, just on the charts. Because basically in life, we also make a lot of rash decisions and stuff like that, and that equates to consequences and stuff like that. And it's just as simple in the Forex market. If we make impulsive decisions, we make, like for example, I was mentioning earlier, we get FOMO, we enter a trade early, our risk to reward is all over the place, our entry is all off. The possibility of us hitting stop losses compared to hitting take profit is definitely much higher. So I would say that trade journal, and make sure that trade journaling is basically a visual representation of your mistakes, and it allows you and gives you the opportunity to go back and revisit those mistakes and reflect on them. And it's not just about trade journaling and just, okay, I'll journal my trades and I'll just leave it there. But it's also the second step, a more important step of going back to look at it, correct, and making sure that, okay, based on those mistakes that I made, how can I avoid them? And set realistic goals for yourself in terms of like, okay, maybe I made like 5 mistakes or a significant amount of mistakes on this particular, maybe for example, the problem that I have with journaling, with trading in general, that's stopping me from being consistent is because maybe I'm making too impulsive entries. So based on your trade journaling, come up with solutions how you can prevent impulsive entries or prevent over trading, prevent revenge trading. And because I've come across a lot of traders, and or even our students, for example, when they just started out, and then I asked them, so have you done your trade journaling? And then a lot of the common questions common answers that I've heard is that, oh yes, I did at the start, and then after that I no longer do it anymore. So my question to them is that, okay, why do you do it at the start and then you don't continue them? And then a lot of them just say that, okay, I just do it in my mind, because I just trade journal in my mind. After I lose the trade, I look at it and I reflect. And then I tell them that and I just ask them a simple question, and then look, how's your progress now? Like a lot of people, they think that they can just trade journal in their mind. After they immediately take a bad trade or whatsoever, if they do reflect on it, they just reflect on it and just leave it there. However, like I said, it doesn't give them a visual representation. It doesn't give them like a trading log of the mistakes that they made. It doesn't give them an opportunity to go back and revisit those mistakes, because like I said, it's your mistakes that define you, and it's how you overcome them that is most important. Because in every successful trade or that we take or whatsoever, it's basically all the trades that go well. And so honestly, there's not much to learn from there, because basically because it went well, it means that our analysis was right and stuff like that, But the thing is that it's from your mistakes, okay, certain factors that maybe you overlooked or did not think of prior to entering the trade. That's why those mistakes were made, and that's where basically all the learning comes from. So say, these are basically the 3 points that,
cool.
I would advise traders out there to focus on.
Guys, if you aren't journaling after listening to that, then you've really got to have a hard look at yourself. Now, Kamil, have you got some 3 pieces of, I suppose, starting points that somebody could look at a price chart and start focusing on this week?
So I think the first most important thing that you should be taking note of would be your higher time frame levels. So basically your high time frame analysis. So like Jerome said, anything on the higher time frames would be basically your monthly, weekly, your daily levels will always be stronger than your hourly, your 4-hour levels. So yeah, that's one of the most important things I feel that most traders don't take note of, because when they go into the smaller time frames, your higher time frame levels, usually they can be quite far away. So they usually neglect the higher time frame levels, or basically the higher time frame bias, the higher time frame trends. So, but the thing is, like, if you don't follow your higher time frame analysis, you get confused, because in your smaller time frames you can have impulses here and there, but you fail to realize that these impulses are just corrections for the higher time frame moves, and that at any point in time the pair can just reverse on you on the smaller time frames. But actually it's just a retest of a higher time frame level, for example, and then the trend continues in the original direction. So that's one I think one of the very, very common mistakes that a lot of traders make. The second thing that I think you should take note of would be your fundamental analysis, because I think a lot of traders, just because they fail to understand how the fundamentals work, they just avoid the whole fundamental analysis in general. So I think that's one key thing that is very important in trading, because as much as we think that technical analysis drives the market, fundamental analysis is the thing that actually drives the market. Because your banks and all that, your fund houses, I don't think they rely on technical analysis to trade. So most banks trade with fundamental analysis, and basically the banks we retail traders, we strive to follow what the banks are doing, and we're not trying to go against what the banks are doing. So if the banks put heavy influence on fundamental trading, I think that's a key aspect of trading that we should not neglect. So yeah, I think that's one thing that retail traders all should take note of, which is your fundamental analysis. And okay, you don't have to really, really understand the fundamental part of trading very well, because there's all these even your banks or your fund houses, they will release their fundamental statements. So for example, FOMC, they will release their statements, and from there we have we do have a rough gauge as to where the market is going, because they will have their bias on the USD or whatsoever. So there'll be a dovish or hawkish outlook. So I think why give yourself the trouble of really digesting all this news when you have all these experienced economists that have been working for the past 20, 30 years that are already telling you that, oh, this market is hawkish, this market is bullish. So we can just follow whatever views they have, and we can incorporate it into our trading without actually putting in so much effort, because for some it might be really taxing to go through all the news or whatsoever. So this is a more simplified approach if you're just going into fundamental analysis. But it's not to say that you can't trade solely with technical analysis. I just feel that it'll be more like there's a more synergistic balance when you trade with your fundamental analysis combined with your technical analysis, which gives you a higher probability of success with your trades.
Cool. And have you got you've got a third thing? Brilliant.
The last thing I would say is, always time your trades very well in terms of basically waiting for a good entry, because most of the time, if you don't wait for good entries, your risk to reward will be screwed. So basically, if you for myself, I usually wait for a retest of a certain key level, or basically when price reaches certain key monthly levels, then I would just take a reversal trade. But that's a bit more dangerous. But yeah, most of the time I'll just wait for price to hit certain key levels before taking a trade. So if price is in the midway to a certain key level, I would just wait wait out and just wait to see how price reacts to my key levels first before taking any trades. Yeah.
Okay. And just a quick question on that, because it's one of these things that I sort of I've noticed over time and sometimes struggle with is when a price gets very, very close to your key level and you're looking to enter at that level, and say it's like a pip away. I mean, what do you do in that case where if it shoots off and next minute it's like now would have been 30 pips in profit, but you missed the entry by 1 pip? What happens in that case? Have you got a strategy to overcome that?
So usually if price doesn't hit my key level and starts moving, I usually do not take the trade. So I would just wait until the next retracement happens before taking a trade.
Okay,
yeah,
right.
So
you'll still go in the same direction, but you won't be entering at that key level. You're looking for the next key level.
The next one,
right?
Yeah.
Okay, cool. Now, guys, we talked about mindset a couple of times here already in the show. Now, the next question is really: have you got any tips that the guys listening can try and implement to help get a better mindset? I mean, we've already talked about journaling, so I think anything other than journaling would be great. So, Kamil, do you want to have a crack at it?
Okay, so I mean, to improve your mindset, I think mindset is not just in terms of Forex trading per se. So it applies to your whole aspect of life. So in terms of your mindset, if you can't have a rash mindset in trading and in life. So to improve your mindset as a whole, I would say you must change your habits. So for example, if you are actually, if you're a lazy person, so okay, I used to be a really, really lazy person. So, but then you must try to give yourself a schedule. So if you're actually really lazy to wake up in your morning for maybe if you're a scalper, you're lazy to wake up, you basically just force yourself to wake up or force yourself to do certain things. So if you neglect certain aspects of trading, like your mindset, then it's really, really hard to make amends to it, because it's more interlinked with your life in general. So if you're a greedy person in general, I think one way to overcome your greed, honestly, to me, is when you get hit by a very, very big loss, or when you experience something out of your greed that causes a major detriment to your life. That will teach you that, I think greed is not the best thing to have in trading or in any aspect of life. Or in terms of fear, once you experience a very bad trade out of your fear, or you lose a significant amount of your money, then when you take those trades, you look back upon what happened when you do make those mistakes. And I think, like Jerome said before, you learn most from your mistakes. So, but in terms of your mindset, honestly, apart from changing your habits, I don't think there's much you can do to improve your mindset. But you basically have to strive to make small improvements in your mindset as on a day-to-day basis.
Yeah, I like that around changing your habits. Like if you can change your personal habits, you've got a better chance of changing any bad habits you've got with regard to your trading. Now, Jerome, what about you? Have you got anything you can add to that, or any other ideas?
Yeah, I mean, since Kamil already talked about having trying to strive to have a good mindset, I will talk briefly maybe the other aspect of maybe having a poor mindset. So having a poor mindset in trading per se, I would say it constitutes to these two terms that I think all traders have heard of before, and that's over trading and revenge trading. So, I mean, over trading, for all your listeners who are not clear of that, over trading basically stems from a winning streak, correct? So you win multiple trades in a row, and then after that you think that you're invincible in the market. You start taking trades that you shouldn't be taking just because you're on a win streak, and then therefore that translates into more losses, and then you over risk and stuff like that. And revenge trading is just basically the opposite. Revenge trading just stems from a losing streak, correct? So because you've lost multiple trades in a row, and then you feel that you want to get back you want to break even per se, so therefore you start taking more trades or ridiculous trades that you shouldn't be taking just to try and cover back those losses. And the thing that is so toxic about over trading and revenge trading is, firstly, you don't know that you're doing it until you've done it. And the second thing that I find so toxic about over trading and revenge trading is that they are very interlinked. So usually what happens is that you start to over trade because of a winning streak. Then after that, you lose everything, all your profits, because you've over traded. And then after that, you start revenge trading just to make back your profits, or just to break even per se. So one tip that we share with our traders, and I'll share with your listeners as well, is that we have this extract rule. All right, and it differs for scalpers and swing traders because like everybody knows, the frequency or the amount of trades that scalpers and swing traders take per week per se is very, very different. So for swing traders, you're looking for anywhere from about 3 to 5 trades per week, but that 3 to 5 trades is basically per day for scalpers. So what we have is like an extract rule, and that is basically the X is basically the amount of trades that you take in a particular time frame. So let's just say, for example, per day. Okay, once you hit that amount, all right, you're off the charts. You're off the charts until the next day. All right. So like for example, let's just say you have a 3-strike rule. All right. It doesn't matter whether it's 3 wins, 3 losses, 2 wins, 1 loss, 2 losses, 1 wins. As long as you hit the number 3, all right, you're out of the market. So this prevents you from over trading. This prevents you from revenge trading. So yeah, that's one rule that I also stick by. So even right now, when I suffer like a few losses in a row whatsoever, I'm off the market, reset my psychology, and then when I come back, I'm making sure that I've already reflected and already got over what happened prior to that, and I'm coming back with a fresh psychology and ready to tackle the markets again. Yeah,
brilliant. I like that. That's really good. We've had that before on the show with a varying, I suppose what am I trying to say here? A variation of that, where it was like this guy was saying you could have 2 wins and a loss, or I think you couldn't have, once you had 2 losses, you were done for the day, but he had a maximum of 3. So if the first 2 were losses, he couldn't take the 3rd trade. So it sounds like you guys have got more of a, like, you got a maximum of 3. You can have 3 losses, but you can't have any more than 3 trades. So it's a good variation. Now, guys, because we've got 2 of you on the show here, we're not going to go through the quick fire round, but I want to give you guys a chance to wrap up and let the guys listening tell them what's the best way for them to get hold of you.
So basically for Radical, you can find us on Instagram at Radical Forex. For my personal Instagram, it's Morals and Malice. Yeah. For Kamil, his personal Instagram.
For my Instagram, it's Kamil.bma.
Okay, cool. Look, guys, I tell you what, we'll hook those all up in the show notes. A big thank you to Kamil and Jerome for sharing with us today. Everything we've discussed here, along with all those links that we've just talked about, will be in the show notes. To find them, simply search for Kamil or Jerome or Radical Forex on tradingnut.com. And until next time, I wish all my listeners trading happiness and success. All right, folks, so there we have an interview with Kamil and Jerome, done and dusted, Radical Forex. Go and check them out. Now, we did shoot that video after this, so go and check that out over there. Basically, everything's over there on tradingnut.com. Remember, merch coming up. Could be a few weeks away, so I'll let you know. Stay tuned for when that comes out. I'm sure you're going to love it. Now, that's coming up, and we've also got the live streams that are happening at the moment. The robot that you can get your hands on that's done 86% this year to date. And also my Robot Builders Club if you want to automate your own strategies, or even just learn the skills so that you can pretty much open doors and doors and doors. All right, guys, until next time, catch you in the markets.